Here is a detailed summary of SoFi Technologies Q2 2025 earnings call. Overall performance and financial highlights. SoFi reported an excellent second quarter of 2025, characterized by strong member and product growth, record revenue, and significant increases in profitability. The company's one-stop shop strategy continues to drive accelerated year-over-year growth in adjusted net revenue and earnings. Revenue. Adjusted net revenue reached a record $858 million, a substantial 44% increase year-over-year. This growth was fueled by both lending and non-lending segments. Profitability. Adjusted EBITDA. A record $249 million, up 81% year-over-year, with a 29% margin. Net income. $97 million, resulting in an 11% margin and 8 cents earnings per share. Gross margin. While not explicitly stated as a single percentage, the contribution profit across all three segments demonstrated strong performance and attractive margins. The company highlighted an incremental EBITDA margin of 43%. Tangible book value ended the quarter at $5.3 billion, an increase of over $1 billion year-over-year and nearly $200 million quarter-over-quarter. Key segment performance. Financial services and technology platform. Combined, these segments generated $472 million in revenue, up a remarkable 74% year-over-year, now representing 55% of total revenue. Fee-based revenue across the business was a record $378 million, up 72% year-over-year. Lending segment. Adjusted net revenue grew 32% year-over-year to $447 million. Total originations reached a record $8.8 billion, including $6.3 billion in the lending segment and $2.4 billion in the loan platform business, an increase of $1.5 billion from the prior quarter. Growth drivers and highlights. Member and product growth. Record 850,000 new members added, bringing the total to 11.7 million, up 34% year-over-year. Record 1.3 million new products added, reaching over 17 million products, up 34% year-over-year. Cross-buy remained strong at 35% of new products opened by existing members. Loan platform business, LPB, showed significant growth, with $2.4 billion in originations, up 57% from the previous quarter. This business is now annualized at over $9.5 billion in originations and over $0.5 billion in high-margin, fee-based revenue, surpassing the student loan refinancing business in scale. Technology platform delivered $110 million in net revenue, up 15% year-over-year, with a 30% contribution margin. Notable client wins include Banco Nación. Lending segment enhancements. Personal loans. Launched a new product for prime credit card customers with revolving balances. Student loans. Introduced a refinancing solution with lower initial payments, targeting the significant addressable market. Home lending. Originations reached nearly $800 million, up 90% year-over-year, driven by a strong home equity loan offering. Strategic investments. Crypto and blockchain. Announcing plans for self-serve international money transfers and a return to crypto investing. Buy, sell, hold of Bitcoin and Ethereum. These are expected to launch later in the year. AI. Implementing AI across business processes, including a new member-facing Cash Coach feature within the Relay product. Brand building. Investments in marketing, including the CMA Fest partnership and collaboration with Kelsey Ballerini, have driven unaided brand awareness to an all-time high of 8.5%. Management forecasts and guidance. Revised for 2025. SoFi raised its full-year 2025 outlook across key metrics. Members. Expecting to add over 3 million members, representing approximately 30% year-over-year growth. Adjusted net revenue, now expected to be approximately $3.375 billion, an increase from prior guidance and representing approximately 30% year-over-year growth. Adjusted EBITDA, now expected to be approximately $960 million, representing a 28% margin. Adjusted net income, now expected to be approximately $370 million. Adjusted EPS, now expected to be approximately 31 cents. Tangible book value growth, expected to be approximately $640 million. Key statements from management. Anthony Noto, CEO, emphasized the relentless focus on product innovation and brand building as drivers of durable growth. Stated the one-stop shop strategy is stronger than ever, accelerating revenue growth to a 2-year high. Highlighted the significant opportunity in crypto and AI, positioning SoFi uniquely to capture the opportunities presented. Detailed how members move through the SoFi ecosystem, showcasing favorable unit economics and higher lifetime value as a sustainable competitive advantage. Express confidence in exceeding medium-term guidance, noting a continued expectation of over 25% compounded annual revenue growth from 2023 to 2026 and an EPS target of 55 cents to 80 cents in 2026. Acknowledge that the mix of business and priorities are changing due to real-time opportunities. Stress the importance of investing for the future and the challenge of deciding what not to do due to the abundance of opportunities. Reiterated a commitment to building the best culture in the world through leadership, alignment, and accountability, operating with a founder mentality, and acting as problem solvers and partners. Chris Lapointe, CFO, confirmed exceeding all guided metrics and delivering the 7th consecutive profitable quarter. Highlighted the accelerated growth driven by capital-light and fee-based revenue sources. Provided detailed segment performance, noting significant revenue and contribution profit increases in financial services and strong revenue growth in LPB. Reported strong credit performance, with consumer metrics, income, FICO, remaining robust and delinquencies trending favorably. Provided an update on fair value marks for loans, noting positive movements. Detailed balance sheet growth, driven by loan and deposit growth, and reaffirmed a healthy net interest margin above 5%. Expressed confidence in regulatory capital ratios remaining well above minimums. Significant risk factors. While not explicitly detailed in this excerpt, the transcript mentions that forward-looking statements involve risks and uncertainties that could cause actual results to differ materially from expectations. These are described in their press release and SEC filings. Potential areas of risk implied include macroeconomic conditions, interest rate changes, inflation, and overall economic health can impact lending volumes and credit performance. Regulatory environment, changes in financial regulations, particularly concerning crypto and banking, could affect product rollouts and business operations. Competitive landscape. Intense competition in the financial services industry requires continuous innovation and effective marketing. Execution risk. The successful launch and adoption of new products like crypto services and AI features are crucial. Credit risk. While current credit metrics are strong, potential future economic downturns could impact loan performance. Lowlights, implicit or areas of note: student loan servicer switch. A change in student loan servicers caused some delayed charge-offs from Q1 to Q2 and payment disruptions, impacting reported metrics for that segment. Net interest margin decline. The NIM saw a slight sequential decrease due to a modest mix shift from personal loans to student loans, although it remains healthy. Invest business monetization. While improving, the invest business is still working towards full profitability, with variable profit dollars currently less than fixed costs. The company is actively working to improve monetization and plans to invest more in targeted marketing. This summary aims to capture the essential details of SoFi's Q2 2025 earnings call, providing a clear overview of their financial performance, strategic direction, and future outlook.